You also talked about something that I think it would be really insightful, Arn, for you to share with the Go Along family, because one of the things that you talked about is if you're looking to create cash flow during the hold period, and then also one of the types of locations that can allow you to do that, and then also have some of the upside on the appreciation over a certain hold period, whatever that hold period is. For some people, that may be the first time that they've heard it put that way, but help us understand, how can you as an investor, either passively as a limited partner looking for cash flow as well as upside, or as a general partner for the locations that can provide you more of the types of opportunities that will give you that cash flow during the whole period and upside at the end? What should we be looking for?
I would say, look where the jobs are going. Look where the population's going, because the population's going to follow the jobs. And then I think also there's an issue about affordability. So I think if you're investing in areas where housing's a little more affordable, you can find that sweet spot where you can buy, and I'm a multifamily investor, so I'll speak about apartments. If you can buy units at a price where the rent you can collect will generate a cash flow, that's the kind of numbers you look at, where, for example, in the Bay Area, you're not going to be able to buy an apartment unit that will cash flow. The price is just too high, but you still want those growth areas too. And if I could back up and speak about syndication and general partners,
Yeah, sure.
One of the things potential investors should understand is most of the compensation a general partner receives is on the back end of the deal after successfully executing the business plan. So I think when you invest in syndications, the people running the deal are motivated because their compensation is a function of how well they do. And ultimately, they get their compensation at the end as opposed to upfront. So I think it creates a situation where interests are aligned with the investor and the general partner.
So making sure that you have a aligned interest is something that's absolutely key. But we have a lot of high paid professionals that are here. That are doctors, lawyers, and a lot of IT sales professionals, right? And so this is also too one of the things that, as you're talking about now, like they're making compensation on the back end. How would I know if I'm spending 70 hours a week as a sales professional, making, a lot of money, multiple mid figures of, and I don't know enough yet to know if they're getting paid on the back end, up front, in the middle? Like, what are some of the things that I could be looking at and I'm going to put myself in the limited partner position to know if the deal that I'm looking at, our interests can be aligned, and also it looks like the partner or the general partner or the key partner or whatever is going to get paid on the back end.
Okay, so I would say, starting with the investment summary would be a good place. So all of these offerings have investment summaries. They generally are also presented with webinars where you have the ability to ask questions, but they will, through the investment summary, show you the income received, primarily rents. They'll show you what the expenses are, operational expenses, taxes, insurance, repairs, maintenance, property management. They'll show you a net operating income less the debt service. That will show the cash flow. And in most of these deals, almost 100% of the cash flow goes to the limited partner during the hold period. And you can make some calculations to see kind of what percentage of your return is from cash flow and what percentage of your return is from the ultimate profit or appreciation of the property. So I think you should work with operators who are willing to discuss this with you to the degree that you want. You can get down into the spreadsheets if you want. I find also what happens is after investors have made an investment or two with an operator and it goes well, there's an element of trust built there. And it's kind of like, hey, I've invested with Billy twice. Those deals went nice. He's got another one. I feel good about it. I feel good about Billy. I'm going to invest. So I think there's also building of the personal relationship that's important.
Okay. Yep. And that I would definitely agree with you that the building of the personal relationship is one of those things that is absolutely key, especially in terms of generating a long-term relationship.